And welcome to our live chat on the ABC of Budget 2019. I'm Ajay Kakkar, the Chief Marketing Officer of Aditya Birla Capital, and this evening I will be your host for this live session. The Union Budget is an annual phenomena that attracts a lot of eyeballs and attention, a lot of chatter, a lot of conversations. And all the media channels and platforms take a day off from their daily routine to give the Union Budget their pride of place. So how's this chat any different? We believe that ABC Live on Budget Day is not competing with any of these channels or platforms that report and analyze the budget through the day. We hope to actually complement them, but with two key points of difference. While the business and news channels do an excellent job of expert analysis, what about you and me? Do we really understand and engage with these conversations? Do we understand the words, the terms, and language being used? Secondly, television does not offer the interactivity that allows a host to engage with the viewers. That's where we hope to make a difference. And that is why ABC Live on Budget. Our experts will decode the budget in your language, my language, the language we speak, and the language we understand, because the budget does affect our lives. Also, our show is not envisaged as a discussion between experts, but instead a discussion with all of you, our viewers. But before we get into the budget and your questions, let me introduce you to our experts. Joining us in this live today are two veterans of the financial services industry who have always preferred and chosen to be the voice of the consumers. First off, let me introduce you to my colleague A. Balasubramaniam, the Chief Executive Officer of Aditya Birla Sun Life AMC Limited. Bala, as we fondly call him, is not only a voice of Aditya Birla Sun Life Mutual Fund, but in his capacity as the chairman of AMFI, he is also a voice of the mutual fund industry. He has been the man behind the highly visible and successful mutual fund Sahi Hai campaign that has brought mutual funds closer to the common man and made the category part of the common man's conversation around money and investing. Also joining us today is Anupam Gupta, a chartered accountant, an investment research consultant, a podcast host, and more. Anupam sure is a man who wears many hats. Aside from his work as an equities analyst, Anupam writes on a range of financial topics. He also hosts the popular Paisa Vaisa podcast, where he discusses all things money. Bala and Anupam, many thanks to both of you for joining us for these conversations on the ABC of Budget 2019. This entire live session from now till 6 p.m. is structured around taking your questions and answering them. Do reach out and ask us questions around the budget, and our experts will be happy to answer them, to decipher the Union Budget 2019 for you. While you put your thoughts and questions together, let me start by asking our experts a question that is top of my mind. Bala, what role does a Union Budget play in the life of the common man, you and me? Very often I hear, इसमें आपका मेरा क्या है? ये तो वो लोग के लिए है. So what is the Union Budget and what role does it play in the life of the common man?
Interesting, of course, budget does create an excitement for all of us being part of the financial market. And second, the budget does provide the roadmap on the way government managing the government finances, then how the common man can also get to benefit, what are various changes that the government is bringing on the table in order to ensure that his taxation part is taken care, he's given more money in his hand in the form of savings and so on and so forth. And this has been a regular affair every year. But one fundamental change that came this budget, of course, this came about 2 years budget, last 2 years. Indirect tax used to be one of the big point of discussion for everyone, not for the common man, of course. But of course, it has an impact on the industrial activities in the country, and mostly industrialist-related provisions on indirect tax. Now that has become a history. Now it's being taken care through the GST. But definitely the direct tax changes that comes in, and it does have an impact on the common man. And that this budget has certain goodies that has come for a common man. And second, of course, is around the way the government looks at in terms of allocation of resources. The more the government allocate resources to the expenditure, it could be social in nature, it could be capital expenditure nature, do have an impact for common man point of view, because both have got impact on the common man, which is the social it's in of different angle, and expenditure towards the capital expenditure increasing is from the angle of building the whole infrastructure. While I'm sure we'll discuss more on this as we move forward, but budget do have an impact on common man to all of us in the form of the necessary change in the tax, as well as the way the government looks at spending on social.
Anupam, my question for you. The union budget is something which is always in the air, end of January, beginning of February. But this time it's different, isn't it? So what is an interim budget? What is a vote on account? Just share that with us, please.
Well, a vote on account is something that the outgoing government prepares, just lays down the accounts on the table in the Lok Sabha, in the parliament, so that the next government can take it forward from there, because obviously since this government is going out, they can't make any major legislative reforms on the tax front. So that's called a vote on account. But history has shown us that a lot of governments have broken away from that format and preferred to go, in fact, for an interim budget, which is somewhere in the middle of a full-fledged budget and a vote on account. So this, I think, was an interim budget, which has a lot of changes across the board, across segments on the taxation front. So to that extent, it's not as big as a formal, proper budget, and it's much more than a vote on account. So I think that's what an interim budget was, and I don't want to get into the politics of it, but this is what the interim budget was about.
Now a quick question for both of you. Your first thoughts on the union budget 2019. Bala?
My first reaction was, is a budget takes care of the common need of the people, which is nothing but increasing the savings in his account, which is for the middle class population. And second is what has been widely heard in the last few years, especially few months rather, post the general election came for some of the states. There has been a widespread feeling that the government will do a lot of things from the farmers' point of view. Again, they have addressed in the budget itself in doing something different for farmers, for giving some kind of money to those who have less than 2 acres of land. And third is there has been a widespread discussion that came around how to increase the employment in the country. Well, of course, a lot of debates and discussions happen around this. Clearly, addressing the need of the real estate sector also is something which I see as some big thing that has come in the budget. In totality, the budget is targeting more towards how to build the growth back. At the same time, increase the consumption, which has been one of the biggest driver for the Indian economy, other than the infrastructure spending the government does. So these two combinations put together, I would call it as a growth budget, I would assume.
What about you, Anupam? What do you say about this budget?
I was actually surprised because I thought that this budget actually has a lot of small things for a lot of people. It's got, if you look at it from the farmer's angle, it's got the 6,000 rupees a year scheme. That's going to affect 12 crore households. That's a fairly large number. You've got pension for the unorganized workers. They used to have a life insurance. They used to have a medical insurance. Now they even have a pension. That's a fairly large base again that you're talking about. Then, of course, you had the big feature. If you recall how Piyush Goyal started off his measures for direct taxes, he in fact praised and thanked the tax-paying base. And although he did not increase the slabs, and if you recall, increasing the slabs actually has a slightly higher fiscal cost. What he chose was slightly, it was more of a tweak. He chose Section 87A to give relief to those people who have incomes of less than 5 lakhs, right? So there's something for people in that income bracket also. Then, of course, for people who are beyond that, you've also got a standard deduction increase from 40,000 to 50,000. And as if all of that was not enough, you've got a whole range of things for the real estate sector as well. So I was very surprised at how he managed to put in all these small benefits which will affect a lot of people in an interim budget. I, for one, am pretty happy with this budget.
So, it's tradition that everyone is asked, how do you rate the budget on a scale of 1 to 10? And I want to do the same, but slightly differently. So, Bala, what do you think? How will the consumers, how will the people out there rate this budget on 1 to 10?
No, my immediate reaction was when I was watching the budget, purely the way he has done the allocation, one on the government expenditure, as well as the way I think he has gone to address, as Anupam mentioned, the large pool of people are the beneficiary in terms of tax, in terms of pension, in terms of farming. So it essentially means that the middle class and below the people are getting addressed, which itself makes me believe that it's a purely something which could drive the growth in the economy. So on that context, I would definitely rate the budget on 1 to 10 scale close to about 8.
Anupam, what do you think? What is the voice of the consumer going to be?
Well,
how do you rate it from his side?
I think from a personal finance perspective, this is a clear 8 out of 10 budget from me also, because there's small things out there, right? He's increased the TDS limit for bank deposits from 10,000 to 40,000. He's increased the standard deduction. He's given some stops on real estate. So there's, if I'm someone who's sitting for my personal finances in the next year, I suddenly have a lot of more room to play around with. And remember that there's, as Bala had said, there's nothing really on the indirect tax front. Remember that prior to this budget, GST rates were reduced across the board to 18%. So you're already going into the budget with that reduction in cost. Now, over and above that, in this budget, you've got the increase in standard deduction, the benefits for the 5 lakh slab. So I think that the consumer has a lot more area to play with for his personal finances. 8 out of 10 here also.
So both our experts think that you are going to rate it 8 out of 10. We would love to hear what do you actually rate it out of 10. But in the meantime, the questions seem to have come in, and the first question is for you, Bala. What does gratuity limit increase to rupees 30 lakh mean for the salaried class?
So I think it's a more of increasing the limit itself means that anybody gets into retirement and they get, of course, gratuity for the full period. You have worked for 20 years, 35 years, for 50 years. All of them work, and ultimately the gratuity is the one which comes for your post-retirement benefit. And definitely increasing the limit, you won't need to pay that much of lower tax. And that benefit, of course, it gets accrued. And to the extent the tax burden comes down. I think if you look at the totality in this budget, the tax burden is getting reduced for people who are below certain income people and retirement people. And third, of course, is the people who have been putting money in savings, deposits, as well as NSCs, where they get even the TDS reduction also comes. I think in that sense, gratuity is also one such measures which the government has taken to give the benefit of the reduction in tax burden for people who earn more than 30 lakhs rupees.
So for all those who are close to retirement and expecting a gratuity of about 30 lakhs rupees, that's good news for you. Question for you, Anupam. What does full tax rebate for those earning up to 5 lakh mean?
This is a tricky one, right? Because when the news came out first, people thought that the slab has been increased. Remember that the slabs for income tax haven't been increased for a very long time, and it has not been increased even in this budget. What's happened is that for that category of people, so there was something called Section 87A, which said that if you have an annual income of about 3.5 lakhs, you get a certain benefit which was limited to about 2,500. So that 3.5 lakhs has been increased to 5 lakhs, and the benefit, the rebate from 2,500 has been increased to 12,500. Now, why 12,500? Actually, if you just look at it, it's 5% on 5 lakhs. So if you're someone who's earning up to literally 5 lakhs, 5,000,000, you will now not be paying any tax at all. You'll still have to file your return and you'll have to claim the rebate because your tax would normally be 12,500, but thanks to Section 87A, that tax is gone. But if you're earning more than 5.5 lakhs, if you're earning 6 lakhs or 7 lakhs, unfortunately, nothing has changed. At best, your standard deduction has increased from 40,000 to 50,000. So that's what the full tax rebate means.
A little good, a little not so good. Let me read the next question. The next question is for both of you from one of our Facebook viewers. Will filing my income tax get any easier? At the end of the day, I have to pay tax, but the process to file my tax seems to be yet a concern for this person. So what do you think? Is that process going to be easier?
See, the way I see Ajay is So I think the point what you made, Anupam made earlier, the 5 lakh rupees is they have not changed the slab structure, which essentially means the people who have a higher income, which is greater than 5 lakh rupees, such as you and me, also falls in that slab structure. Accordingly, we can pay lesser tax. If the 2.5 lakh rupees slab has now become 5, it's not happened. So basically, they are addressing the people who are less than 5 lakh rupees. For them, tax burden comes to 0, and for others, of course, the earlier tax burden remains the same. The other thing which, of course, has come in the form of not filing of tax return is about one of the pain point which, of course, all of us got is actually the refund that come from the income tax filing of return. It takes a lot of time, and for the especially the middle class income middle class taxpayers who actually pay 50,000 rupees tax and then look for 30,000 rupees refund. For them, they have to file a tax return and wait for the refund to come. I think that's the class of investors I think is going to get the huge benefit in the form of easing of income tax filing. But other than that, whatever the government is doing in terms of speeding up the whole the process of assessment, I think that will take its own time, and it will have its own course of action.
So while the filing of tax may not be easier or more difficult, the getting back the amount you due is possibly going to be faster. Bala, thanks for that. Another one for you, Bala. Is there any benefit for fixed deposits, saving deposits, or post office deposits?
Yes, for sure. I mentioned earlier about the TDS. I think in the above, I think certain amount, there is a TDS element comes in and need to be deducted. Whether you are the retired person or you are a person who has got a lot of savings but does not have an income, and the TDS actually became as a must, whether you put in savings deposits, whether you put in the postal deposits. This government, I think, has recognized the need of the large pool of savers, especially the senior citizens and the common investors who have not so high savings, but they have all the savings and fixed deposit, but they are subject to TDS deduction. Definitely, the provisional change, it gives a lot of boost for such kind of people where you don't need to face the TDS deduction and then wait for the refund to come. And the point earlier mentioned, and this point, I think both hand in hand together, definitely is benefiting large pool of people who have been largely dependent on income coming out of fixed deposit investments and postal deposit investment.
Anupam, fixed deposits and post office seems to be top of mind so far. So the question I read is there is no TDS of up to 40,000 interest on bank and post office accounts. Does this apply per individual or per bank account?
It's per individual, right? Because you're the person who's filing the return and you might have 10 or 20 or how many of bank accounts, and you might have all the fixed deposits out there, but you as a person are filing a single IT return, so it's going to be on a per individual basis. The previous limit was 10,000 and now it's 40,000. So if you have interest from a fixed deposit in a bank or from post office deposit, if the limit of interest per year is 40,000, TDS will not be cut. That's a big benefit. It's per individual.
Anupam, the next question could be my question. What's the difference between tax rebate and no tax?
Okay, so no tax is a 0% rate, right? That's a rate for anybody who's between 0 rupees and 2.5 lakh rupees. The tax rate is 0%. From 2.5 lakhs to 5 lakhs, then you come to 20%. And I think so you've got 0%, 5%, 20%, and 30%. Those are tax rates for each slab. 0% is no tax. A rebate, on the other hand, is what the government gives you to reduce your tax burden. So if you're someone who's earning up to 5 lakh rupees, previously the rebate was 2,500 rupees and the limit was 3.5 lakhs last year. This year, if you're earning up to 5 lakh rupees, the government is giving you a rebate of 12,500 rupees. And since your tax payable is also 12,500, you're actually going to be paying no tax. So it's just a coincidence that the rebate is also resulting in zero tax, but there's a fundamental difference between the both.
The no tax was obviously music to my ears. Let me come to the next question. How has the tax on my existing investments changed at the time of investing, receiving dividend, and interest or redeeming? Bala, what do you say? Receiving dividend, interest, or redeeming, or at the time of investing, have there been any changes in tax?
So I would assume this of course, this new budget will come into effective from the assessment year starting from financial year starting from April 2019 and March 2020. And whatever the investment that has been made and received, any interest that is received on account of those investment during this period till March 2019, I think the old rates will be applicable, and April 1st 2019 the new TDS structures will be applicable. As far as the dividend distribution tax arising on account of mutual fund dividend, I don't think there is any change, and that TDS probably would continue. That's why I assume Anupam probably will be able to give some clarification on that. But otherwise, it's any income that is accruing from April would be the one where the new finance will be applicable.
So, a quick one from me. When you have experts sitting next to you, you want to ask them the questions too. So the question I want to ask is, if this is an interim budget or a vote on account, when the next budget comes in this financial year, will these proposals stay, or will they get overruled by the new budget? How does it work?
I think the way historically it worked is the vote on account budget generally is presented before the election, which nothing but approves the expenditure that is needed for the interim period. And this budget is, of course, as Anupam mentioned earlier, a little more than the vote on account budget. It's an interim budget. It's actually addressed the large pool of need of the country, which is nothing but driving the growth. And therefore, the main budget, when they present post the government formation, I think there has to be a lot more continuity of the provision that is present in this budget, and there has to get continued even in the budget that's going to be presented post the election result. So I would assume this year is going to be unique, where majority of the provision that is generally people look for is covered in the interim budget. Therefore, it could be just either not the ratification, it could be a further roadmap that can be given by the new government when they form, in addition to what has been presented in the interim budget.
So all of you will see a poll up on your screens. Please do participate, take a moment and share your thoughts with us. In the meantime, please keep your questions coming, and let's move on to our next segment, where we will be talking about savings and investments. Let's start with you, Bala, and your question. What is standard deduction and what does it include?
Of course, standard deduction is which is basically the investment under Section 80C. You get that benefit, which is investing in either the LSS schemes or any other related product. You get that deduction. Second is you also get, all of us make donations, and then Section 80G you get some kind of benefit. That also can be reduce your tax burden. Standard deduction is nothing but the provisions that can help you reduce your tax burden, and that's something which is the one which actually help the large pool of middle class population to save some tax. And the same thing which of course was mentioned in the budget this time. While the people up to 5 lakhs rupees no need to pay any tax, but taking into account the standard deduction that is applicable as per the various provisions of the income tax that I mentioned earlier, up to 6.5 lakhs rupees income, effectively taking into account the standard deduction, you'll have to pay probably the least possible tax. That's the benefit of the standard deductions that can accrue to any taxpayers.
A question that comes from one of our viewers, Anupam, with the inflation brought down to 2.1%, does it mean reduction in my household expenses? So is the inflation at 2.1% and is there a reduction in his household expenses?
Well, a 2% inflation is quite low for an economy which is growing at more than 7%. I think the government, Mr. Goel, spent a lot of time on explaining how in this regime the inflation has remained fairly low. I think it's been about between 2, 3, 4%. So you look at it from your own household expenditure, right? If you look at the cost of vegetables or the cost of food and all of that, has more or less remained in control. the one very big expenditure that had shot up towards the end of last year was oil, right? Petrol, diesel, all of this had gone up in line with the global rise in crude prices, but even that has come down now. So 2% actually is a kind of an average number across India. Your experience might be more, might be less, but usually a 2% inflation is on the lower side, and I'm sure that for a lot of us, if you're buying food and vegetables, you would have noticed that more or less the prices of these foods and vegetables have remained under control.
Informal sector pension of 3,000 per month at a premium of rupees 55 per month from the age of 18. Question is, what about those already in their 40s and 50s? So if we are looking at people from the age of 18, good for the youngsters, they have an opportunity way forward. But what about those who already crossed those age bands? Anupam, what do you say?
I think it should be applicable, right? I mean, the concept of pension is that after you retire, you get this monthly income based on the amount that you saved before you retire. So your age really shouldn't matter. If you're 18, obviously you've got a nice long period of time over which you can keep on investing and grow that into a nice big corpus. But if you're 40 or you're 50, you probably have a lesser period of time. You know, in financial planning in general, it's great if you start early. For pension also, I'm sure that the exact details of this scheme are yet to be announced, but I'm sure that the government would also leave this open for someone who's in their 40s or who's in their 50s. If I just look at a comparison of the national pension scheme, which is already in effect. I just opened an account the other day, and I'm in my 40s. I'm actually 47, and I could easily open my account. So I'm pretty sure that even this scheme, which is open for the unorganized sector, which will give a pension of 3,000 per month, will be open for those in the 40s and the 50s.
But Anupam, it may be open. The question, I guess, would also want to cover that for people who are more senior, that premium is not going to hold, right?
Yes, they would probably have to invest a large amount. They would probably have a smaller window to invest, but I think it would be possible there also.
Another question, Bala, do you want to take that? How can we claim the benefits of interest subvention on loans to MSMEs?
So I would presume, I think the interest subvention is given for certain segment of the market in order to give them a comfort about any potential benefit that should get, and they should actually being an important element of the economy, they should drive it. And these subventions are generally given from through the government schemes, directly through the banks in which they operate, or through the NABARD, or through the cooperative banks. And therefore, from MSME point of view, it will directly accrue the interest subvention in the form of the loan rates being lower, and that's the way I think historically it works. Therefore, one doesn't need, of course, go and claim this benefit. It actually gets accrued in the form of interest borrowing that comes from the bank itself, and that's the way it works in the agriculture. That's the way it works in the textile subvention which the government of India had given in the past. I would assume for MSMEs and SME as well, a similar kind of subvention would come. But the mechanism from the bank's point of view, somebody is providing this subvention of interest, ultimately the government of India refund them, and that normally the refund happens through the Mundra Bank or NABARD, any other banks who is the nodal agency who actually enables this kind of refunding of such subvention to the provider of the loan to the SMEs.
So the next question is about GST and its applicability to residential properties. How much GST is applicable to residential properties currently, Anupam?
I don't know the exact rate, but I think it's on the lower side. And in the budget today, Piyush Goyal made a very specific mention that he'll be talking to the housing industry to even bring this number down. And I think that it's for properties that are under construction or soon to be launched. I think it's on the lower side, and I think that the government is planning to bring the rate even lower.
If I'm not wrong, Ajay, I think the current GST rate is about 12, and there was some expectation that it will be brought down to 5%. And though it was expected even before the budget, maybe there could be an interim announcement could come from the GST, because GST anyway doesn't come to the budget. The GST Council decides. That I think the good part of the Finance Ministry is mentioned about in the speech. which probably means that one more SOP could come for the GST sector, real estate sector.
One more SOP that can come for the real estate sector. And now back to all of you. Let me remind all of you that you can voice your opinion by participating on the polls that will be up on your screen. In the meantime, let's move on to the next segment, which is about housing. We have some questions pertaining to this sector. And the first question, what is notional rent? Who can avail that? Anupam?
So if you have more than one property, let's say that I own the property where I stay, but I also have one more property. The government assumes, so irrespective of whether I have put that property out on rent or not, the government assumes a notional rent on that, and I have to pay tax on that notional rent. I'm not aware of the exact amount, but that's a concept of notional rent. As if you have two properties and if somebody else is staying there, let's say that your parents are staying there or some relative is staying there, and they're not paying you rent, right? Because this is part of family. The government assumes a certain rent, and you have to pay tax on that. In this budget, as per the provisions that were declared, that notional rent has been abolished. So that's the concept of notional rent.
So actually, that means that if you haven't actually earned money from your second property, you don't have to pay tax on deemed income, right?
That's right.
Excellent. So for those who have two houses or more, good news for you. Next question, what does exemption on notional rent for a second self-occupied house mean? Is that similar to the first one, Anupam?
Yeah, this is like it's like a 1+2 thing, right? If I have my own house where I'm staying, B, I have a second house which say my parents are staying, and I'm rich enough to have a third house which I've actually given out on rent, then that rent will be taxed, and if it is, and if I have not given it out on rent, then the notional rent concept applies for the third house, right? So there's been no change on that. You'll still have to pay tax on the notional rent for the third house.
Bala, do you want to take this one? He plans to sell a property in the new financial year. Is there anything in the budget for him?
I think it looks like when Finance Minister made a remark, specifically connecting Mumbaites, where people live in people live in a city, but they want to move to suburbs. They want to go for a bigger flat at lower price and so on and so forth. So again, he mentioned about that and then made a remark that up to 2 crore investment, he doesn't need to pay tax. And beyond that, if invested, of course, under 54E in a new house, then the tax will be applicable. So, which essentially I presume that somebody wants to sell a property in the year 2019-20, and up to 2 crores investment tax applicability will be less on the capital gain. And above that, of course, he can invest in a new house, and then he can avail the Section 54A benefit. As of now, such kind of capital gain has to be invested in either NABARD or any designated bond to get that tax benefit. And now it can be reinvested in the real estate, and then he gets that benefit over and above that the exemption that they are given up to 2 crores, which again I see as a big booster for real estate sector is one. And second is a lot of people actually are hesitant to sell the property because the income that the capital gain is quite large. Therefore, how do I manage the tax incidence on that? And that I presume is the benefit that is giving here.
I think real estate and housing remains top of mind for us Indians, and this question is pertaining to that. What is the impact of the budget on real estate? Is there anything in the budget this year for the real estate industry or for the housing industry? Anupam, would you like to take that?
Yeah, I think that this budget probably has more for the real estate sector than the previous ones or any that I can recall in recent memory. There is the notional rent that we just spoke about. There is TDS on rent, which has been increased from 1,80,000 to 2,40,000. So for some categories of landlords, if they are getting rent, then previously an amount of 1,80,000 would attract TDS. Now that has gone to 2,40,000. And then of course there's a big one that Balaba had just mentioned, which is that on capital gains, if I'm selling a house, I can actually invest in 2 houses up to a 2 crore capital gain, and this is again a once in a lifetime exemption that I can avail. And I think there's something for builders also regarding notional income of their unsold inventory. So there's a whole lot of SOPs and measures that are aimed specifically at the real estate industry, some from the builder side and some from our, which is the consumer side. So I think this is, from whatever I've read so far, it seems to be a fairly strong, fairly positive budget for the real estate sector.
Buying is in the mind, selling is in the mind. Bala, you were talking about people who want to sell and move possibly further away to get bigger flats or many more flats. So this one is for you. Can you explain the capital gains exemption when the owner sells one house to buy two houses instead?
Yeah, I think as I mentioned earlier, Anupam also just highlighted about that. You get a capital gain out of every house sale that you make. Let us assuming you sell a property in South Mumbai and it gives you say X amount, and out of that up to 2 crores capital gain coming out of that. And earlier that capital gain investment used to be available only for investing in one house. So now that can be invested in two houses and encourage you to actually invest in two houses. And to the extent you can get a lower tax incidence on that. And in otherwise, in the earlier terms, you invest in one house and then the rest of them you invest in the financial instrument designated predefined by the government of India or as per the income tax. They used to get that income tax benefit. I presume in this budget they are actually encouraging people to buy two houses instead of having one, and that actually the benefit that accrues. This I would assume this will one increase the demand, and second is also encourages people actually to move from one house to other house, so that it creates a demand for new houses, and that's something I presume is something that the budget is offering.
More power put to the people, they say. Possibly this budget is saying more homes to the people. Let's look at the next question, but before that, a reminder once again to you, please do voice your opinions by participating in the poll which is up on your screen. And let's see the final segment for this live that we have in front of you. What is the fiscal deficit, Bala? And technical term, but how does it affect my family?
Yeah, of course, fiscal is something which realize the money managers keep looking at every time how the government is managing their revenue versus expenditure. So fiscal has a lot of implications. It's like all of us run our own budget, and many times we end up with expenditure is more than the income, and income is more than the expenditure. It varies from one to other. The fiscal deficit is nothing but the shortfall in the revenue for the government. And we must also understand this budget has given a lot of tax benefit for the common man. The government has kept aside 6,000 crores for 12 crore farmers, aggregating at about 72,000 crores roughly is the provision they are keeping as an expenditure, which was not the last year. The same way the government has kept aside money for creating a pension corpus from the age of 18 going up to 60. Means again government is spending. So therefore the corresponding revenue is missing to meet this expenditure. Then naturally the fiscal deficit will be high. But fortunately the government has done some kind of math in such a manner the fiscal deficit is not increased to kind of alarming level. Logically it should go up if the revenue shortfall is there. So in that context, fiscal from a common man point of view, it can be considered as long as there is a social benefit, is benefiting him. From the government point of view, higher the fiscal deficit means higher the borrowing by the government. Higher the borrowing means higher the interest rates. Therefore, it would probably affect the interest rate environment and thus impact the borrowers from the banks. So that's I think longer term impact. Definitely, I think this year in this budget, the government has given a lot of importance for fiscal to be at the level at which more or less of last year, which means impact for the common point of view. It's a plus benefiting him, but not so much impacting on the negatively.
So when a country spends more than it has, that's fiscal deficit. When you and I spend more than what we have, well, I'll leave that to you to find a name for that. Next question for you, Anupam. Does this budget have anything for traders and MSMEs?
Not specifically, not to the extent that you had for the rural public, like you had the 6,000 rupees a year direct transfer for the farmers or the pension scheme. So there's nothing of that scale for traders and MSMEs, but I would assume that as economic activity picks up, Piyush Goyal spoke a lot about the GDP growth which has been going strong. There's been a recovery in the industrial capex as well, and some amount of boost that will come from this direct transfer to farmers. All of this should hopefully translate to better opportunities or sales opportunities, revenue opportunities for traders and MSMEs. So I think there is a benefit of that, and then of course there is the overall benefit of the 5 lakhs tax slab for those whose income falls in that bracket, but nothing to the extent or the scale of agri.
Let's see what the time holds for us. I think we are reaching towards the end of our live, and therefore let me look at some closing statements from our experts, both Bala and Anupam, very sought after on this day, the budget day. Let's hear what they have to say for us. Bala, let's start with you for your final thoughts on the budget 2019. Overall, what do you think? What were the expectations? I know of a research which talks about health was top of mind of people. People want to know what it does for the health. People want to know what it does for job creation. People wanted to know what does it do for female security. There were top expectations and concerns of people before the budget. So today, after having heard the budget, analyzed the budget, what are your final thoughts on budget 2019?
Yeah, I think clearly pre-election we are always used to expecting vote on account budget, which will be a non-event, and this year it has not been so. Basically, reasonably full-fledged budget in the name of interim budget presented by the government is something definitely is a big change, which essentially also means from the common man point of view, what otherwise goes in his mind, as you rightly mentioned, about jobs and tax and other things get addressed. So to the extent, I consider it as a full-fledged budget and definitely setting the ball rolling for next financial year. And second is the large pool of the people are the drivers of consumption, and therefore addressing the needs of the common man is something which I like it, and giving more money in the hands of people. And interestingly, I was in one of the sessions I was talking, I said as a money managers, as a financial service industry person, we always expect these savings to be saved in the form of investing in mutual funds and other things. And the first time I also felt that maybe the saving that is being accrued to the common man should be used for spending, uplifting their own lifestyle, so that it also leads to increase in consumption, therefore it leads to increase in the GDP growth. And lastly, the addressing the farmers' needs. At the end of the day, farming income is one of the people who live on the farming income is one of the largest, and addressing his needs through direct benefit to him instead of other means, various different means of doing things, also is something is excellent. And again, once and for all, put the speculation at rest, and therefore that I see it as a big welcome step. And lastly, this is the first year, this is the first time I am seeing the budget. The thanking actually the large pool of taxpayers in the country, out of whose money also the government is also doing a lot of the social initiatives, acknowledging that the taxpayers' money is being used for this purpose is something which I appreciate, and government has taken this first time ever acknowledging the contribution of big taxpayers. This I call it as a big recognition, apart from giving more money in the hands of people.
So Bala, the crusader for the mutual fund industry, is telling you please do invest money, but also spend money, and hopefully this budget is going to give you more money in your hands to spend. Anupam, your parting thoughts on budget 2019. What do you think? What do you say? Expectation versus reality.
Ajay, I really can't add much to what Bala said because he's just hit the nail on the head, right? Each and every year we go into the budget with expectation that most of them are dashed. Last year, long-term capital gains had come, and for us who are in the equities market, that was a bit of a dampener. The Nifty actually has gone down in the last 1 year. You know, with that kind of a burden going into this budget, we really didn't have much expectations, and what was given to us was actually far beyond that. So I think from that perspective, the budget was quite good. It set the right tone. I think that whichever new government comes in and presents a full budget in July would not want to tinker around with the proposals that have been placed out here. We are on the right path. There is money for the most stressed part of the economy right now, which is agri. placing 6,000 rupees per year in the small farmer's pocket. There is pension for the unorganized workers. But there's a lot of it for a vast society of the people. I think it's a great start. The incoming government, which comes in the next few months, will find that this is a good place to take on the bigger institutional reforms that are probably needed to get India back closer to an 8% GDP growth per year, which will obviously benefit all of us.
There is a union budget which happens once a year. This year possibly it's going to happen twice a year. The fact remains that all of us have our budgets to manage on a daily basis, on a weekly basis and a monthly basis. So I think it's important for us to look at the union budget in its perspective, but more important, our budget. How does it affect our budget? I think the clock before me tells me that we are now close to the end of this chat, and the budget is important for all of us, but what does it mean to me? Pala and both Anupam started by saying that they would like to give it from your side an 8 out of 10. Let me see what you all say today, and very often the world looks at the stock market the next day to see your sentiments, your vote. So till then, thank you so much to Bala, thank you so much to Anupam for being with us in the midst of a very hectic day, a day which the industry looks forward to, a day which the Aam Aadmi looks forward to. Speaking for myself, must say that this has been a great experience to be here at ABC Live on the Union Budget 2019. At Aditya Birla Capital, it is our constant endeavor to simplify people's relationship with money. It is our constant endeavor to enable people to live fulfilling lives by harnessing the full potential of money in their life. I do hope that this live conversation on the Union Budget 2019 helped you to get closer to living a fulfilled life by understanding the ABC of this budget and how it will impact your life. There are lots more questions that I see lined up, but time is short. So good night, have a great night, and a great year ahead. Thank you.